Hello everyone, this is our group's market view and we will serve this PowerPoint to analyze the Australia dollar and the US dollar will happen to this exchange rate in the next 3 months. And it's included three parts, their interest rate, inflation rate, and the economic growth rate. Firstly, let's have a look at the interest rate of Australia. Through this graph from the Reserve Bank of Australia, we can find that the cash rate from January 2016 to January 2018 years was remained 1.5%, and as we know, the cash rate is the interest rate set by the Reserve Bank of Australia. So we can just expect that the interest rate of Australian dollar will remain 1.5% in the next 3 months. Following is the interest rate of US. According to the graph from the Federal Reserve, we can find that the interest rate of US can keep increase, finally increased by the 1.6% in the April 2018 year, and we expect that the interest rate of US will increase to 1.8% in the next 3 months. So US will have a higher interest rate than Australia. Then will affect the capital loan and more people sell Australian dollar to buy the US dollar. Then the supply of the Australian dollar will increase. The supply curve will shift to the right. At the same time, the US will get less demand of Australian dollar. That will affect that the demand curve will shift to the left. Finally, we will get a new equilibrium and we can find that the Australian dollar expects depreciation against US dollar.
Now I will talk about the inflation rate. Here we got the graph of the US inflation rate. As we can see from the graph, the inflation rate in the United States has remained relatively stable since May last year, and then it has risen from 1.7% to 2.1% in the past 2 months. However, we think it's just a short-term increase. We predict that the inflation rate will decline after the peak of 2.1% in the next 3 months. Let's move to the table and graph of Australian inflation rate. As can be seen from the table and graph, in the recently half year, Australia's inflation rate has remained stable at around 1.9. Unlike the sudden increase of the United States inflation rate in the last 2 months, the inflation rate of Australia has remained stable. Therefore, we estimate that the Australian inflation rate will rise and achieve to 2.2%, while the United States inflation rate decline in the next 3 months. As a consequence of this, United States citizens will buy less export from Australia. Therefore, the demand of Australian dollar will reduce. On the foreign exchange graph, the demand of Australian dollar will shift to the left. Furthermore, due to the lower inflation rate of the US, Australians' demand for the US export will increase, so the Australian dollar holder will try to sell Australian dollar and buy United States dollar for the US exports, which means there will be more Australian dollar supply. On the foreign exchange graph, the supply of Australian dollar will shift to the right. The new equilibrium shows us that the Australian dollar will depreciate against the United States dollar.
Here is a graph of GDP growth rate in Australia. We can see that Australia had increased by 2.4% in 2017. We think this number will go a little bit down in 2018, approximately grow 2.3 in the next year. And for America GDP growth rate, unfortunately, we have only got a real GDP histogram from the United States Bureau of Economic Analysis. But that's okay, because as we know, the real GDP always lower than nominal GDP. But the case is America real GDP had increased by 2.8% in 2017, and the number is much higher than Australia GDP growth rate. We reckon that America GDP will keep higher than Australia growth rate in next 3 months and will achieve 2.9% in the future. From the evidence, because America has a high level of economic growth rates in the future, America will have more demand for Australia export, which means the demand of Australia currency will go up, and on the graph, the demand curve will shift to the right. In addition, people will try to sell Australia currency and to invest in America because America has a higher GDP growth rate. Then the supply curve will shift to the right as well. For the new equilibrium point, it's hard for us to predict the states of Australia currency. But I personally reckon the supply curve has more influence than demand curve here. I mean, just in this situation, I show you some evidence I have got. Here is Australia export pie chart, and we can see that the America accounts for only like 5.6% of Australia export. It's much lower than Japan and China. Therefore, the change in demand curve shouldn't be larger than the change in supply curve. Also, America is the biggest economy in the world, and the fast growth rate is more attractive for Australian people to invest in America. So on the graph, I personally think the supply curve will shift more than demand curve. So we get a new equilibrium point here. So I personally reckon Australia dollar will depreciate against US dollar.
For summary, and according to the evidence, we expect that the Australia inflation rate higher than the US and the US interest rate higher than Australia. So the US economy will perform well in next 3 months. So we believe that it will be case Australia dollar to depreciate against the US dollar. And the following is our reference list. And thanks for listening.